Ladies and gentlemen, welcome back to the channel. I know that one of the top of mind topics these days is crypto taxes because we're getting close to April here. So today I have Shehan from CoinTracker.io, my preferred place to do crypto taxes. And he's here to lay down all of the good juicy details about what to expect from taxes this year and how it's treated. So thanks for being here, man.
Yeah, thanks for having me.
Cool. So I guess the first thing, first things first, I want to give you an opportunity to introduce yourself, where your expertise, how you got into crypto taxes and in the crypto space in general.
Yeah. My name is Shehan. I'm a CPA. I currently serve as a head of tax strategy at CoinTracker, which is a crypto tax software tool. Um, I've been a CPA for almost a decade now, but for the last 3 to 4 years, I only, focus on crypto taxes. So, there's a lot of nuances in this space. The technology is developing super fast, but then the guidance and the regulators are not moving super fast. So there's always that gap. I'm in the weeds when it comes to crypto taxes, and I also write for Forbes about crypto taxes as well. So some of you guys might have come across my post online. So that's a little background about me.
Thanks for that. Yeah, I'm an avid follower of your Twitter, and I'm always reading up because it's such a complicated and nebulous and often really scary and stressful thing for people, especially the folks that want to do the right thing but feel like they don't have the tools to do so. So my first question to you would be, for someone who is a complete novice in terms of crypto taxes, they've done no research whatsoever. In a nutshell, how is cryptocurrency treated by the IRS in the US and maybe some of the other foreign, tax regulators?
Yeah, I think the main thing to know is that crypto is taxed. For
Mhm.
some of you guys, it might
Yeah.
be surprising, but it is taxed. And how it is taxed? IRS is taxing it as a property. I think an easy way to think about it is how IRS is taxing stocks and securities. So you have a purchase price, you have a sales price. If you make a profit, you got to pay capital gain taxes on the difference. Similar to US, there are other countries that are taxing cryptocurrency as an asset, like Australia, UK, Canada. They have a pretty similar treatment. Capital gain taxes get applied whenever you sell those cryptocurrencies. So
Mhm.
that's how crypto taxes work at a very, very high level. It's taxed whenever you make a profit.
Got it. Yeah. So it's evaluated on capital gains and losses, fairly similar to how stocks would be treated. And I guess the complicated thing is that there are now so many different ways that people are utilizing cryptocurrency. We're talking, the simplest part of DeFi, for example, is crypto to crypto swaps, where you might make multiple hops from cryptocurrency to cryptocurrency to get to the one you're looking for. How are those things being treated by the IRS, and how can people, even at the base level, capture that information to track those?
Yeah, I think DeFi is complicated. Our typical DeFi transaction consists of at least 7 to 8 different taxable transactions because there's a lending component, there's
Mhm.
earning of interest, and there's, like you mentioned, swapping from one coin to another.
Yeah.
And it becomes extremely hard for anybody to track these things. For example, when you go from one coin to another, and if you make a profit, it is a taxable event, and IRS doesn't really care whether you received cash or not. So
Mhm.
this is a question that a lot of crypto users have. They're like, okay, I never received cash or I never cashed out, but why do I have to pay taxes? But unfortunately, that's how the property taxation work, in the United States. So yeah, I think it comes down to tracking down all your transactions, how much you paid for each unit of coin, how much you sold those coins, the date purchased, date sold, and it becomes virtually impossible for you to kind of track these things manually. And that's where, a tool like CoinTracker can come in handy. You just connect to your exchanges, wallets, and etc. And then the CoinTracker provides you all the necessary tax forms.
Yeah, I can attest to how powerful it is. I was in a position where, being in the space that we're in, like, we're both interested in cryptocurrency, and I quickly found that my, traditional way of doing things, which is to track things in an Excel sheet, do the math myself, keep track of everything myself, does not scale. And I found that I was extremely stressed out when crypto started going mainstream, and there were more places to diversify into other than just Bitcoin, Ether, Litecoin, and that's it. so CoinTracker has been a lifesaver in terms of just being less anxious about missing something, and it takes less time. So
Yeah, I mean, it works as a, tax planning tool as well. And also, if you have coins, spread across multiple exchanges and wallets, once you hook up all those accounts, you can also see your portfolio, the market value, because otherwise you had to log into each of those accounts to see the balances.
yeah.
So there's two things, you have portfolio product, and also at the end of the day, it does your taxes.
Definitely, definitely. And so one question that I've been getting a lot, on the channel and on Twitter, et cetera, is, the dreaded question on the 1040 form, the core tax form for folks. The IRS is now asking you if you've dabbled in digital currencies, cryptocurrencies. And I think people are worried that that means that if you have done that, that you are at some extreme high risk for audit, or you're going to be labeled as a criminal, or what have you. Can you shed some light on that?
Yeah. So I'm sure you guys have seen that question. The question is pretty much asking, have you sold, exchange, received, or have any, interest in, virtual currency during 2020? It's a simple yes and no question. I believe the IRS is trying to gather information about U.S. crypto tax, pairs. Because if you look at the history of the compliance, the number of returns that the IRS received with some type of crypto affiliation have been in the thousands. And if you look at exchanges like Coinbase and Binance, they have millions and millions of users. So there's a huge compliance gap. And IRS put that question to kind of gather information about people with crypto in the US. And if they do have crypto, by gathering and analyzing answers to that question, they can, kind of come into some conclusions about, okay, we have this many people, but this is the number of people out of that entire population that are reporting these transactions. So here, I think the TLDR for you guys is that just get the question, the answer right. I mean, if you did something with the crypto, if you sold, or if you earn any interest, just make sure it's check yes, and then report your taxable income and gains on the right forms. Just be truthful with answering. Again, just because you say yes doesn't mean that you're going to be subject to an instant audit tomorrow. But you had to answer it sincerely.
Yeah, and I'm a big again, I've said before, I'm a big follower of your Twitter, and you say, like, strategically, if you're planning on not submitting anything regarding cryptocurrency and just hoping no one figures it out, that is the far less appealing option compared to submitting something, because then you can say, even if it wasn't 100% correct, you made an attempt in earnest to declare it and to do it in good faith, and that's easier to manage. Can you explain that a little bit more?
Yeah, I think what you're referring to is this concept called statute of limitation.
Mm-hmm.
So the statute of limitation is a legal concept that gives the IRS the power to come and audit you. So generally, if you file a tax return with crypto and all the numbers, reasonably right, IRS only has 3 years from the date you file the return to come and audit you. And if they find a mistake after that 3 years, they cannot come after you. Now, that 3-year limit gets extended to 6 years if you understate your income by more than 25%, and you don't want to do that. But the sad part is that if you never file a return, and I know there's, extreme crypto, holders, they're like, okay, IRS never going to know, I'm never going to file a return. But the sad part here is that if you never file a return, you never start the statute of limitations. So IRS can come after you forever. And you're voluntarily giving IRS unlimited time to come and audit you, versus you filing a return, starting the statute of limitation, and giving them the least amount of time, which is 3 years. So this is why I always say, filing something is better than filing nothing. Something that you guys definitely should do.
Yeah, and I'm sure you've experienced the same thing. But I catch heat from people all the time saying, taxes aren't legal. I disagree with taxes. It's like, no one likes taxes. Let's be honest. No one likes them. But unfortunately, being involved in the crypto space and believing that you don't think taxes are fair don't absolve you of the responsibility of paying them, and it will not stop you from being prosecuted for not doing so. So I always tell people that's not an excuse.
Yeah, and look at these, a big name example, John McAfee. I mean, for the past few years, like, he's been hating taxes, he's been evading taxes. Now he's in jail. So, I know it's taxes suck, but at least, just pay the least amount as legally as possible, and use tax saving strategies to save your tax bill versus not filing anything and just giving IRS unlimited time to come and audit you, which you shouldn't do. It's a stupid decision to make.
Yeah, and you bring up a good point, which is something that is fully legal, which is to find legal avenues to minimize your tax burden. And so can you give maybe a couple of examples for people that might trade crypto, or even just hold and invest long term, like how they can minimize their tax burden?
Yeah, I mean, there's plenty of ways that you can save, crypto taxes. I'll give you maybe 3 to 4 very simple things that you can
Sure.
do it just with a click of a button, or just by not doing anything. So number one, just know that hodling is completely tax free. So unless you need the cash to invest in a better asset class, you shouldn't be cashing out, because just
Hmm.
hodl it. You don't have to report to the IRS. It's completely tax free. And then number two, if you really had to sell something, make sure you keep the coin at least 12 months before selling. When you keep a coin for more than 12 months, it's subject to a much more favorable long-term capital gain taxes versus your ordinary regular income taxes. So just by
Hmm.
holding for 12 months, you're saving a bunch of taxes.
Right.
And then number three, you can play with the accounting method, whether to use FIFO, LIFO, or HIFO. So the accounting method pretty much dictates which unit of coin you're selling for tax purposes. And that's important because you acquire these coins at different times and different prices. And you obviously want to be selling the coin which you paid the highest amount for, and that reduces your capital gains. And if you use a tool like CoinTracker, with just a click of a button, you can go from HIFO accounting to FIFO accounting to LIFO accounting, and you can pick the one that generates the least amount of gain. So those are the three like easiest things that you can do. I mean, obviously there are other advanced tax saving strategies, but just to kind of summarize, just hodl. Hodling is no taxes involved. If you really have to sell, make sure you sell the coins which you held for more than 12 months. And then number three, make sure you use HIFO accounting. So you're always selling the costliest coin first.
Yeah, so you're minimizing the space between your cost basis and your disposal value, right? To
Correct.
minimize your
Yes.
taxable income. That makes perfect sense. And so this brings me to two questions that I get all the time about CoinTracker specifically. And that one is, and I guess the first question is CoinTracker and sort of policy, but is it allowed per se for you, year over year? So let's say 2019, I filed with FIFO as my accounting method. Can I the next year, say for my 2020 taxes or 2021 taxes, file with a different accounting method as long as I can give substantiation as to why?
The simple answer is yes. Again, IRS has not been explicit about this,
Yeah.
but you can arrive this through logic. So I'll explain. IRS is saying that you can use specific identification method if you
Mhm.
have detail about all your lots, meaning you need to have the date, purchase price, and everything.
Mhm.
If you have all that detailed records, you can literally pick and choose which unit that you're selling. So your question is, can I go from FIFO to LIFO or vice versa, right? If you really think about it logically, FIFO is actually a subset of specific ID, right? Because
Yeah.
in the case of FIFO, you're picking the units that you acquired the earliest. So sure, I mean, if you meet the qualification for specific ID, you can go from FIFO to LIFO or anything, because you're in that bigger circle of specific ID. And if you use something like CoinTracker, like because it's a software tool, it captures everything that you need to meet that specific ID requirement.
Right. So something like CoinTracker is the, sort of the fast path to getting to that point where you can claim, I'm using specific ID so I can have some flexibility in my accounting method at the end of the year.
That's right. And again, you don't have to. This is another FAQ that I get. Uh, whether do I have to mention to the IRS which accounting method that I'm using on the tax forms, and you're not required to tell the IRS
Hmm.
if you're using FIFO or LIFO. The only time you had to prove to the IRS that this is how you arrive at the capital gains is when you're if you're under audit or something like that, then they're going to ask you your supporting documents. So until then, you don't have to tell the IRS, but you had to be truthful with your calculations.
Yeah. So if they ever do come to say, hey, we need to, explain this, you have documentation that explains how you arrived at that value.
That's right. Yes.
Right, right. And here's another thing, for me personally that I struggled with early on is, I would get like certain exchanges, like Uphold is one, I think Coinbase does in some cases, but they give you these 1099s, right? And they're like 1099Ks or different forms, different styles of forms that they'll give you. And often they'll have these really high numbers on them, right? And
Yeah.
that'll scare you, right? You'll say, "Oh my God, I have, $60,000 in taxable gains." And actually, I think it was Shandan who helped me with this from CoinTracker, who said, like, it's not that you owe this, it's that they can only see so much when you move crypto from one exchange to a personal wallet or somewhere else. So it's their best estimate if you disposed of everything. Can you give a little more information about how those 1099s can be misleading?
Yeah, there's multiple 1099s there. I think the one that you're referring to is called 1099K.
Hmm.
Yeah, like you said, if you look at the 1099K form, it's by month you can see these huge gross numbers.
Yeah,
The problem is that there's exchange that they don't know your cost basis, so they're only reporting your sales to the IRS. And you
right,
should not report those sales numbers to the IRS, because that way you double and triple paying your taxes. So
right.
this is why you need a tool, so you can plug the exchange and figure out your cost basis, because you get to minus that cost basis from that big sales number, and you're only reporting the difference between the sales price and the cost basis. So yeah, so you're going to get these tax forms in for the next few years, because there's exchanges are going through some challenges as well when it comes to producing these forms
Yeah.
correctly, because of the unique nature of the space. That's where you need a tool like CoinTracker, so you know exactly what to report. But don't panic. This is a very common issue in the crypto space.
Great. Yeah, I think that'll give people a lot of peace of mind, because I know those forms are coming out now, and I've had a couple people message me saying, how is this possible? So thank you for that. And my last question for you, related to CoinTracker specifically, is another one. This is probably the question I get the most often when I mention the tool on on videos is, um, can folks that don't live in the United States still use CoinTracker? And my canned response is generally, you can use the tools that are there to achieve spec ID on your transactions, but the forms and some of the other calculations might vary depending on where you are. But I wanted to defer that one to you.
Yeah, we do support Australia, Canada, and UK. Are taxpayers.
Hmm.
Depending on the country, they have different types of tax out ID methods. So
Hmm.
yeah, if you live in UK, Canada, or Australia, you can use CoinTracker without any issues.
Great, great. I think that's also helpful information for people to know, because I know there are quite a few people who watch the channel that are from the UK and from Canada, especially, that might be interested in giving this a try now that it's coming up on tax time. Um, but I wanted to conclude by giving you a chance also to to tell folks where they can find you on different social media platforms, or maybe where they can find you, your writing on Forbes.
Yeah, I think Twitter is a place where that I'm most active, or it's easy to find at the Crypto CPA. Other than that, you can just Google me, Shehan Forbes, and you can see my column there.
Great.
Yeah, I would say those are the two places to be connected with me.
Perfect. So, folks, if you're watching, please do give Shehan a follow on the various social media channels. I'll leave those in the links down below for you to check out. But of course, if you have any questions about crypto taxes, please leave them in the comments. I will shuffle them to Shehan as I need to, and we can keep the conversation going. So, thanks so much, man, for being here and for answering questions.
Thanks for having me.
Absolutely. Cheers, everyone. Have a fantastic day.